Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. Well, the news of the week has to be the fact that the State Department came out today and said any Americans in the Ukraine should leave immediately, meaning within the next 24 to 48 hours. The thought had been that Russia wouldn't invade the Ukraine during the Olympics because they're allies with China and they didn't want to cause any conflicts for China. Now the thought seems to be, yeah, they may invade during the Olympics. The 10-year hit 2%. I've been on the record for how long now saying that I didn't feel like when the 10-year hit 2% that the market would like it. Well, we're there, and the market didn't like it. The CPI report came out this week showing a 0.6 increase, meaning a 7.5% year-over-year inflationary rate, the highest since 1982. How do we digest all this? Let's take a look at the charts. At the time of this recording, it is late on Friday evening, so the futures market is closed. Taking a look at the charts, I was reminded that back in October, we had sent out one of these S&P updates talking about when the market was moving to the upside, that a corrective move could come down to 4,200. Well, that's exactly where we hit on the 24th of January. In the last S&P update, we showed how we had this zigzag pattern right here that was qualified with a pretty solid 61.8% B wave correction, meaning the C wave extension could come down to that 400 level on the SPY, which happens to be where that gap exists that has yet to be closed. On Tuesday night during our TradeFinder meeting, and by the way, if you haven't signed up for TradeFinder yet, you should do so. You can sign up underneath this recording or go to our website at ewotrader.com. It's free. We take a look at the markets every Tuesday night. We look for trade ideas. We have a live Q&A. And in the TradeFinder, we notice that there is a pretty symmetrical triangle here, meaning that the market could break either way, even though we have that qualified zigzag pattern to the downside. Well, from here, boom, you can see that we had a false breakout to the upside. Our subscribers are aware that when you break out of one of these triangles, the first breakout day doesn't mean anything. You have to have a second day, a follow-through, a confirmation day, which we didn't have. And then today, moving to the downside on the news out of the State Department. So it looks like that C wave is on its way down towards whatever level. Do we hit 400? I think if Russia actually does invade the Ukraine, that could happen. See how that plays out. In the intro, I mentioned the 10-year. Here we are above the 2% level. You can see a big move to the upside. We actually pulled back a little bit today, which makes sense because we were a bit overbought. If I walk it back to yesterday's trade, you can see that there was some pretty good separation from where we were in the 10-day moving average. So all we did today is come back to the 10-day moving average on the low, but we hit the 2%. So backing up a little bit makes a lot of sense. Where do we go from here? Do we continue to move to the upside? I still don't think the market's going to like it. And, it's easy to say that, well, the move in the markets was to do with Russia and Ukraine, etc. But we've known that for a while. And we've also known, in my opinion, that the 2-year was likely to hit, or the 10-year was likely to hit 2%. So pick your poison as far as what's driving the market to the downside. One thing that surprised me a little bit is we didn't get much of a bounce out of the dollar today once that news came out. I thought that the dollar would rocket back to the upside. I still think that if there is an actual invasion, and maybe there's still some that think that it's still jawboning out of Russia, that they're not actually going to go through with it. I think there's a lot of people that still believe that. But if they do, I think we see this dollar move back to the upside, and perhaps we take out that wave 5 and move to the new wave 5 projection. We hit that 38.2% fib level. We came back to the previous 4. Now we see where things go from here. It's going to be pretty interesting to see what happens. Gold. People have been asking about gold. I was saying that I thought gold would come up and test this area here at 174. It didn't look like that was going to happen. It looked like, well, we got close back here on the 25th of January and that was it. Well, no, we actually are right there at that 174 level. And I don't think gold's done either if there is an invasion. I think that anything that has to do with safe haven type of investments like the dollar, like gold, are going to move to the upside along those lines, along with probably oil. We'll take a look at that in a second. But looking at silver, we sent this out as an alert to our subscribers because you can see that we had a pretty good symmetrical triangle here. And looks like there's a decent move going to come about from silver. And then you see that, wow, we have an outside day today, almost an outside bar. Maybe the high didn't quite take out the high of yesterday, but that was a pretty big bar today. It's unusual to see big bars right at the point of the triangle. So perhaps the breakout is going to be quite volatile out of silver. Be interesting to see which way it decides to go. Remember, when you have one of these triangles, it can break in either direction. Looking at oil, as you would expect, oil did bounce back to the upside on that news, but it's really just tracking along that 10-day moving average in the wave 3. And in the TradeFinder, Tuesday night, we talked about how if Russia does invade, that wave 3 probably continues, and we come up here towards this wave 5 target, likely hit $100 a barrel, some forecasts as high as $120 a barrel. But if we get to the point where we pass the middle point of February, we get past the Olympics, and there hasn't been an invasion, then maybe we get this wave 4 corrective move on oil. And that wave 4 there doesn't mean the wave 4 is on its way down. It just means that if the wave 4 starts, that's where we could find some support. But I think that all cards are in the air right now based on what ends up happening with Russia. We take a look at the Qs. I thought we would show that. Pretty interesting pattern here. We're actually in a 5-wave impulse pattern to the downside, and you can see where in this case this tap box, which that's a projection, it stands for time and price projection in this software program called Profit Source. You can find out more about it at hubb.com, hub.com. I think it's the best Elliott Wave software that's out there because it's programmed directly from Ralph Nelson Elliott's algorithm. A lot of Elliott Wave softwares are personal adaptations of the Elliott Wave algorithm. Interesting here to me is that the wave 4 has not been labeled yet. We smacked that tap box right in the middle of it, and then we're moving back down, but yet it hasn't labeled yet. Why? Something isn't fitting within the algorithm yet. So could we bounce higher? Maybe. Before today, you could have made a case that we could have moved a little bit higher to label that wave 4, but on the move today, I wouldn't be surprised if that wave 4 gets labeled at any point in time. And with interest rates moving to the upside, it's going to be very challenging for the Qs. You need to start looking elsewhere for allocating capital, likely into the XLE, something to do with energy. Bitcoin, well, we made a nice move up to that 38.2% fib extension there on the wave 4, and now we turned and headed back down. Is that it? Well, if we break back below 40,000, we're probably coming back down towards 36 again. We took a look at the 32,000 level back on the 24th of January and made a nice move to the upside here. But is that it? Is it just a wave 4 bounce and Bitcoin is headed lower in this wave 5? You can see that the wave 4 has labeled here, which means that is a qualified wave 4. Once it becomes confirmed, then that lime green area will turn to this purple color, and you can see that we would expect the wave 5 to be intact. So that's not a good environment. That was one of the areas where you could see positivity as far as a risk-on type of an environment in the markets. But with the news that came out today, the CPI, it's hard to imagine a scenario where the markets move higher. When we get to the VIX, I'm going to talk about one scenario that exists that could drive the markets to the upside. We didn't cover the Nifty last week, so there was some questions on the last recording of could we take a look at that and the DAX, so thought we'd go ahead and do that. And if we walk this back a day, you can see that, man, there's a really nice symmetrical triangle on the Nifty as well. and that makes a lot of sense. You complete a wave 5, you go into a corrective phase. So we had a zigzag pattern here, and now we've moved into symmetrical triangle, classic Elliott wave stuff on the Nifty, and the DAX has been nailing Elliott wave as well. Remember that this was a wave 5 here. It hit its target, it relabeled to a 3. We had a perfect 50% correction in the wave 4, and then we came back down, hit the wave 5 target again, right within that tap box. And then if we walk this one back, you can see there was a triangle here as well. So you can see that a lot of these international markets are in consolidating symmetrical triangles. Makes sense because the wild card, again, the whole Russia-Ukraine conflict, what ends up happening there. And with this point, look like maybe we're going to try and break to the upside, false breakout just like we had on the SPY, and then the move lower today. So maybe we get an extended wave 5 and it goes even lower, but the DAX has done everything it was supposed to do. Just absolutely spot on Elliott wave. All right, let's look at the VIX. And we had another spike to the upside here. We talked about this in Tuesday night's TradeFinder as well, where we came down to this 20 level, and it looked like that was going to be an area that was going to try to find support. And boy, did it. Look what happened the past 2 days with the VIX jumping back to the upside. We got over 30 today. We closed back below it, but I think volatility is here for a while. And it doesn't have to do just with Russia and Ukraine. It's interest rates. It's what the Federal Reserve is going to do. There's now chatter that the Federal Reserve is clear to do a 50 basis point rate hike if they want to. A lot of people still don't think they'll do that because they feel like that might be a little too much, might really be saying, hey, we really screwed up by injecting liquidity for too long. And even though the market probably needs a 50 point rate hike, that it would just be too much of the Federal Reserve admitting that their mistake or that they made a mistake and that they probably won't go 50 basis points. But I think that we're going to have volatility here for a while. So what's the scenario where we can move higher? Well, there's a lot of people on that downside trade in the markets because of everything that we've talked about in the recording. So when you get everybody on one side of the market, often the market tends to go the other way. It's the path of least resistance when everybody's on one side. And that might be counterintuitive, thinking that no, if everybody is short the market, it's easier for the market to go down. It actually works the other way around. But that's really the best case scenario that we can find because all the technical patterns are pointing towards moving lower. But there's still that one little carrot dangling out there that so many people are short. That could be the one thing that does move the market higher. So by the time we get together again next week, we'll probably know if Russia is going to do anything with the Ukraine. If they haven't by then it becomes less likely that they're going to, and that'll give us a little bit more of an idea of where things are going to go. Going to be a very interesting week. Hope you enjoy your weekend. Take care, everybody. Look forward to talking to you again soon. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.